Welcome back to Fast Market here on the TD Ameritrade Network. Let's get to our next guest, and that's going to be Landon Swan, co-founder at Likefolio. We're having a discussion here on Costco. They released June comparable sales. Now, Landon, when I look at this stock, you know, it does well. They make a lot of their money on their subscriptions, but we're starting to see comparable sales starting to flatten out, go lower a little bit. But the comparables that they're going against, especially year-over-year numbers, are pretty astronomical because those were double-digit gains on a monthly basis. But they're starting to moderate here a little bit. What kind of data do you guys see out of Likefolio?
Yeah, sure. You're right. Absolutely. I mean, this stock is the last earnings report. They flew up. The stock flew up quite a bit. Street loved that report. And, you know, May was down 0.3% same store sales. June was down 1.4% same store sales. And what we've got, you know, when we look at the web data, which I don't think is the greatest metric for Costco, but it does give us some indication. It's actually pretty flat. When we look at just consumer demand on social, it's actually growing pretty sharply, up about 26% year over year, which I know does not match up with the same store sales numbers, but it is an indicator of people being a little bit more, I guess they're just talking a little bit more about the brand in general, and wanting to go to the brand. Contrast that though with the happiness. We've actually seen happiness on the consumer side fall off about 7 points from the high, and it's about 5 points over the last quarter. So I'm definitely concerned with that. You can see here on the chart that line at the top, that sort of purple line, is the overall happiness, with the red and green being positive and negative. I'm sorry, negative and positive in that order. But the overall percent happiness is, it's trailing off. It was about 75%. Now it's getting into like the 68% range, which is, you know, obviously not a good thing. And so for each company, we look at very different metrics. We look at the web usage. We look at app usage for some companies. We look at consumer demand. We look at consumer happiness. And I think for Costco, the consumer happiness is the most concerning right now, just because people, you know, generally speaking, they've always been pretty happy with Costco. But for it to drop off that much is definitely a little bit of a concern. But you know, to the contrary, like I said, the consumer demand is up significantly. So we are, you know, bullish in that regard, but bearish on the happiness. So it's a little bit of a mix. But this is a company that's just kicking butt. I mean, they've got it figured out, right? I mean, they're the largest fine wine retailer in the U.S. They've got the Kirkland brand, which is doing extremely well. They've got those $1.50 hot dogs, which they just said are not changing, which is amazing. I wonder, you know, 20 years from now, they're still going to be $1.50. I hope so. But you know, I think their model is just really incredible, that they've got these, you know, these membership dues that account for about 2% of their revenue, but almost it's about 88% of their operating income. So this is you know, they're basically like trying to somewhat break even on the products overall, on the net margins after employees and everything, and just take that membership as the primary income stream. And that's the difference maker for the company. If the membership was free, then they would be almost losing money, right? So it's a big part of the company. And I think that overall, you're right, the comps that they're looking at year over year are very tough to beat. But I do like that the enthusiasm on social is very strong for this company. A little bit down on the happiness side, but overall the number of mentions are rising significantly. So I see this as more of an opportunity, this little bit of a sell-off today in the last couple of days. If this continues over the next, 4 weeks until their earnings, something like that, I'd probably be bullish going into that earnings report. So I want to see how the market reacts over the next few weeks until earnings. But if it continues on a downward trajectory because of the June same-store sales, then I see it as a buying opportunity.
Landon, I'm going to give you my theme on Costco. You tell me why I'm wrong here. I think the street, the trading community, is getting this wrong on these numbers that they're seeing, because same-store sales, you know, monthly down 1.4% in June, down 0.3% in May. Okay, I get that. But if you take gasoline, which everyone knew was coming down, a year ago it was $110. Everyone knew that was coming down. If you take gas and exchange rates, foreign exchange rates out of this, same-store sales were up 3%, and total store comp sales were up 4 percentage points. So both those numbers, their foot traffic was higher, but gas prices hurt them. And there's nothing Costco can do about gas prices. This company is still firing on all cylinders, like you mentioned, but the stock has sold off significantly. It's down $9 today, almost down 1.8%. something percent here midday, but it's having a weak day on numbers that, to me, if you take out the part that everyone knew was coming down, these numbers aren't so bad, Landon.
You know what? I agree completely. They have no control over gas, and they shouldn't. And we shouldn't really judge them on that. It's just a way to get people in the store. And what we're seeing, at least with our data, is that more people are interested in going in the store. Again, there's a little bit of slide in happiness, but overall, if they're doing a good job of keeping people in the store, keeping their margins up, their costs down, then I'm not too worried about gasoline costs. And I don't think that you should judge them based on that. And just like you said, when you take it out, if they're up on a year-over-year basis on same-store sales, then this is a completely wrong direction, I think, and again, just a buying opportunity.
I don't get this happiness stuff, Landon, your data that you have. I mean, who doesn't like going to Costco? Besides the crowds, that's always an issue, right? But that's the key thing for me is Kevin mentioned, and you mentioned, the decreasing comparable store sales down in May, down in June. Is that what the market's maybe concerned about, that this is a growing trend, that maybe it's going to continue to pull back because inflationary pressures, even going to Costco, it takes hold a little bit. I like buying wine there too, but maybe I'm not buying the same amount that I used to before due to other inflationary pressures.
No, I'll agree with you there. There are some macro concerns. I mean, we've seen data in our social data that shows that people are maxing out their credit cards. Mm-hmm. They're taking out more loans, and they're having less in savings. And of course, eventually you get to a point, if that's your behavior as a consumer, you get to a point where you're spending less. Hopefully before you get all maxed out and everything, but the American consumer is what it is. So yes, we are seeing that that's the way the general economy is going. So I think you could make the argument that in general, you've got consumer macro trends as a headwind for Costco. However, as a company, I think that it's executing very well, and I think it's one of the best in the breed. So it's best in class. So, if you want to be short the economy, I get it, and maybe you have some concerns there, but I'm always comfortable being long one of the best companies in the industry. So unless you think the economy is really going to go down in a big way, huge recession coming, then I'm fine owning Costco here. And again, again, any kind of sell-off here, I think, is a buying opportunity, especially if it continues into their next earnings. Now, if on their next earnings they come out and say that July same-store sales are down more than 1.4%, in other words, the trend is accelerating, I think investors are going to really flee the stock then, even if they can make the argument that Kevin made about gas. So I think they've got to print a number that is less or is closer to zero than negative 1.4% for July. As long as it's kind of leveling out and coming back, I think everyone's going to be fine with owning this stock, considering, again, those consumer macro trends as a bit of a headwind.
Right. And, historically, every 5 years, they've raised subscription prices 5 to 8%. They haven't done it when we're going into year 6.
Did you just say your wine consumption's going down?
No.
Because let's clarify, there is no consumption going down.
The bottles that I buy might not be the
okay,
upper
there
level.
you go.
Maybe
Let's clarify.
Yeah, maybe that's the inflationary pressure. All right.
Quantity versus quality there.
Yes. I like quality too, but maybe I have to pull back on that. All right, Landon, great stuff, great data as always.
Thanks, guys. Take care.
All right, that's Landon Swan, co-founder at Likefolio.